Welcome. In this video, can Zbcn coin make an ATH again? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand. A careful examination of the chart clearly shows that price movements have been trending downwards for some time, forming a distinct downward trend line. Such patterns usually indicate that sellers have been in control of the market for a certain period of time. However, such falling trend lines also constitute an important breakout area in technical analysis. This is because when the price has been suppressed below this falling line for a long period of time, it can be signaled that this pressure has ended and the price is now looking for a new direction. In the current situation, the price seems to have approached this descending trend line and is now at a critical decision point. Traders are keeping an eye on this level because this could be a technical turning point. The determination of the price at this level reveals the sentiment of the market participants and sets the stage for a possible reversal. If the price manages to break through this pressure-inducing line upwards, it would not only be a technical breakout, but also a restoration of investor confidence. Such breakouts are of great importance in technical analysis because they often represent the start of a new trend. In particular, an upside breakout of falling trend lines indicates that the market has had enough of downside moves and is now preparing for an upside move. This is naturally a strong indication that buyers are starting to return to the market. If the price holds above this critical line and maintains above it, an upward movement can be expected to be built step by step. In past examples, when similar technical structures were encountered, it was observed that there were usually remarkable rises after the breakouts. In particular, the increase in volume and positive momentum following such trend breaks have been effective in moving the price even higher. Looking at the current structure, the possibility of a similar scenario is quite strong. With the price crossing this level, investors are likely to make bolder buying decisions. Moreover, this potential breakout would not only mean that a technical resistance level has been breached, but also that a psychological threshold has been crossed in the market. This is because downtrends often symbolize periods of fear, indecision, and uncertainty. Breaking out of this situation represents a significant turnaround, both morally and technically. In such a case, the price will now have the courage to move towards new targets by crossing this line that it has been rejected so many times in the past. The fact that the price has touched this trend line several times is also technically significant. This is because the more times it is tested, the more it is considered to work as a strong resistance, and the more effective a signal it will give when it is broken. Therefore, every rejection so far has actually strengthened the impact of this possible breakout. Now, the price is right on the verge of this line, and an upside breakout could be the first step in the break trend, retest, and move higher structure that we often see in technical analysis. Of course, such breakouts are usually followed by a short-term pullback or retest. However, this is not a negative signal, but rather a confirmation that the trend is now working as support. In other words, if the price breaks the downtrend and returns to the same level with a short-term correction and holds there, this will bring a very positive picture. The persistence of the price above this falling trend line could be a promising development, not only for the short term but also for the medium and long-term targets. Because, as we often see in technical analysis, such structural breaks can sometimes herald a new bullish channel or a new bull market. Therefore, these levels, which should be carefully monitored, can play a key role in determining the strategy of traders. But we cannot decide the analysis only with trends. Let's look at other metrics. Stay tuned. When analyzed on the chart, it can be easily seen that the price has been facing resistance at a certain level for a long time, and this level has now become one of the most critical thresholds in the market. This resistance represents an important area where the price has tried to gain upside momentum many times in the past, only to be pushed back by sellers' pressure. Therefore, a breach of this level will mean much more than just an ordinary price action. In technical analysis, such levels are often referred to as key resistance or psychological barriers, and when broken, have the potential to initiate serious structural transformations in the market. Currently, the price is positioned very close to this critical level. The approach to this level suggests that buyers are now more bold and willing to move the price higher. If it manages to break firmly above this level, this could not only lead to a short-term price bounce, but also to the price settling at a new level, and from there, to much higher targets. This is because when such resistance levels are broken, there is now a technical empty space in front of the price, as it is now above areas where selling pressure has been intense in the past. This means that there are no serious obstacles to the price moving upwards, which usually results in an accelerated rise. Such levels can also herald trend reversals, because if a certain resistance level hasn't been broken for a long time, it's perceived by both traders and algorithmic systems as the end of the uptrend. However, once this line is crossed on the upside, both manual and automated buying systems are activated, setting the stage for a rapid upward climb in the price. After such breakouts, the price usually enters a new trend channel and starts testing its upper limits. It is at this stage that the price leaves the old highs behind and opens the door to a whole new set of targets. Another important point to emphasize in this analysis is that this line is not only a technical boundary, it is also of great importance for investor psychology, because many investors remember it as a level where the price started to fall and previous rallies ended. Therefore, a break of this level would remove the psychological pressure on the market and increase the appetite for buying. Especially when investors interpret this breakout as a signal of confidence, the upside buying intensifies. If the breakout occurs, a new story begins to be written on the chart. The previous high may no longer be an area of resistance, but a potential area of support. This is a very common occurrence in technical analysis, where the price will backtest every strong level it breaks to the upside. If the price successfully responds to this test, it can now move on much more confidently. If other technical indicators also give positive signals during this process, the bullish scenario becomes even stronger. In addition, exceeding this level may offer significant opportunities not only for short-term traders, but also for medium and long-term investors. This is because a new high indicates that the price is now transitioning to a stronger market structure and is attracting interest from a wider investor base. This means increased volume, greater market depth, and more stable price movements. New highs often bring new buyers. This is because many investors have confidence in the market when they see new highs and want to get on the train. From a technical point of view, such moves usually signal the process of price discovery. In this phase, the price rises to levels never seen before, and the supply-demand balance is re-established in these areas. A closer look at the chart shows that the price dipped below the 200 EMA some time ago. This can be interpreted as a temporary signal of weakness from a technical analysis point of view, as the 200 EMA is a very important average that long-term investors and large funds closely follow, and a price above it indicates a healthy market structure. What is more important, however, is that the price quickly rebounded back to this level without moving too far away from this average. This suggests that the market is still being followed by strong buyers and retains the potential to move higher. Currently, the price has touched the 200 EMA again. This could be a critical technical turning point. This is because many traders use such averages not only for trend identification, but also as dynamic support and resistance levels. If the price makes an upside breakout after touching this level, it could signal strong confidence to traders. Especially after the recent pullbacks, the bullish movement towards this average can be considered as an extremely positive development in terms of showing that the market is trying to recover from the bottom. 200 EMA shows long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.